What's going on, everyone? This is Jordan with Conquer Trading and Investing. In this video, we're going to discuss two very important things. The first thing we're going to take a look at is what's going to happen to the miners after the Bitcoin halving, as the amount of Bitcoin mined a day is cut in half. The second thing that we're going to take a look at is going to be whether or not the global slowdown is going to affect the current coming cycle of Bitcoin. And then we're going to also take a look at some really interesting charts. Let's get started. Right now, I just want you to see what's going on with Bitcoin. In just about 28 days, we hit the Bitcoin halving, and you will see the daily revenue at the current price of Bitcoin goes down from approximately $13.4 million down to $6.7 million. It's cut in half as the reward goes down from 12.5 Bitcoin every block mined down to 6.25. All right, so what will happen as the revenue received every day from these miners is cut in half? All right, here's a little bit of a chart to help you walk you through it. So what's going to happen is that the first thing that's going to happen is you have two sets of miners. We're going to keep this really simple. We're just going to dumb it down to make it easy to understand. It's going to paint a clear picture for you. You have two sets of miners. The first set right now, they're not using the best equipment and they don't have the cheapest cost of energy. And right now, they're kind of struggling to get by with Bitcoin priced where it is, which means what? As soon as the halving takes place, these people are really going to be suffering. Then you also have another set of miners. Now, these are the strong miners. Why are they strong? They have cheapest cost of electricity, right? So the cheapest cost to mine, as well as they have the best equipment, the most efficient equipment. All right, so keep that in mind that we have two sets of miners. Now, as soon as the halving hits and the daily revenue is cut in half, these miners over here that are weak miners, what's going to happen to them is they're going to be forced to sell every single Bitcoin they mine in order to cover all of their costs, as well as they're going to go start depleting their Bitcoin reserves. This is going to put a little bit of near-term pressure on the Bitcoin price. It's possible, and that could last anywhere from 0 to 3 months. Within that time, most of those miners should capitulate, meaning go bankrupt and get kicked off the grid. Then what happens next? These strong miners, all right, they're better positioned. Their cost is way lower than the weak miners were, right? Because they have cheap cost of electricity and they also have good equipment. What's going to happen to them is that they're not pressured to sell to meet their costs right away. They'll be selling a little bit of Bitcoin, of course, right? But they're not pressured to go ahead and meet all these costs because their cost of doing business is much lower. And they're actually going to be saving as much Bitcoin as they can and not selling that, knowing that what's going to happen is those other weak miners are going to capitulate. There's going to be a difficulty adjustment. Basically, all of the rewards these miners are getting are going to be going to these stronger miners, and these stronger miners are going to be holding up for higher prices, knowing that after the halving, Bitcoin tends to enter the bullish phase of the cycle. Now that brings up, is this time going to be different, right? What's happening this time? Bitcoin's never been through a recession before, right? We're in the midst of a global slowdown due to, amongst other things, it's really the popping of the everything bubble. Whether you want to blame it on the virus or not, that's up to you. But what's happening and what's going to happen is that the Fed has already gone ahead and they've met that dollar liquidity crisis, right? They have gone ahead and they've expanded their balance sheet so far by $4 trillion. QE affinity is taking place. And not only that, the US government has gone ahead $2.1 trillion. Bank of Japan has gone ahead with another $1 trillion. There's massive amount of liquidity out there, which should store up that dollar liquidity crisis for the time being. By the time we get another jolt to this system, there's a good chance Bitcoin has really bottomed out and has really started its ascent towards all-time highs or made new all-time highs and won't be as affected by much. But what you have to understand, so what I'm getting at is what caused that dump of Bitcoin was a dollar crisis. The Fed reacted with a $4 trillion response, right? That was a dollar liquidity crisis. I think they overstimulated. I think what they went and did to make sure that they got out of that was they overstimulated. And what that means is that this is the perfect environment for gold and Bitcoin, right? So over the next 12 to 18 months, we're going to see a bull market in both gold and Bitcoin. This is actually the ideal environment for Bitcoin. This is why it was created. And with all the expansion of the Fed's balance sheet, the expansion of the global monetary supply, this is really what is really going to provide some fuel to Bitcoin and is really going to help as it enters this next bullish phase of its 4-year cycle and really help it to take off. Now, let's go ahead and look at some charts together. All right, I have several more charts that I want to go over with you. Really interesting. We're going to start with this one. This one is dollar cost averaging into Bitcoin. If you were starting on the first Monday of the year and every Monday thereafter to spend the same amount of money in purchasing Bitcoin, what your average cost would be. You could see if you started all the way in 2012, and the purpose of sharing this with you is not to show you if you started in 2012 how low your average cost of Bitcoin would be, because the fact is not many people were really aware of Bitcoin being a viable investment in 2012. You're going to see why I get into this in just a second. So, but if you did start in 2012, your average cost of Bitcoin would be $49.30. Now, if you started in 2013, your average cost would be $302.94. Interesting to note, right? If you started in 2014, all the way at the top down here, your average cost is actually $734. Whereas if you started a year later in 2015, it's a bit higher, $813. All right. So it's actually the year you start, the earlier you start, not how high the price is, that leads to a better actual cost of Bitcoin. You'll see that play out coming ahead. Again, let's go all the way back up to 2017, the year that had the high of Bitcoin, right? This was in December, the high of Bitcoin. Or you could start here in January of 2018. If you would have started dollar cost averaging in January of 2018, when the price of Bitcoin was circa $18,000, you would see that it peaked at 19,400. January 2018, you would see that if you, since then, every Monday purchased Bitcoin, your average cost of Bitcoin would be $6,668. Here's a closer look at that so you could see just the last few years over here, 2017, 2018, 2019. Why this is important. Because if you trade Bitcoin around the 4-year cycle, right? If you use the stock to flow chart to know when to actually start scaling into Bitcoin and then when to start taking profits, and just instead of trying to time the market, just have a regular every Monday, you go ahead and spend that same amount of money. Listen, even if it was $50, you're looking at going ahead and scaling into Bitcoin the best possible way. As far as where we are right now, we're just about 29 days until the halving. So we're in April of 2020 when this video is being shot, and by the time it's published and you're viewing this, we're getting really close to the halving. What happens? What are the expectations for the halving? This is actually exactly where my expectation is, and this is a fair price. I do believe that we overshoot it to the upside, as markets tend to overshoot to the downside. 93% drawdown from the high, 85% drawdown from the high, 84% drawdown again from the high, right? And I also have my expected Bitcoin trades all the way down to $30,000. That's exactly what my view. This is exactly in view with my line as well, which means at some point around 18 to 21 months from now, more or less, I'm going to turn extremely bearish on Bitcoin. I'm actually going to be taking profits and selling against Bitcoin, as I do expect we're going to see a severe drawdown coming down and testing just above these new all-time highs, as happened in the prior halvings. But right now, I'm uber bullish on Bitcoin. I'm trying to show you right now why you should be scaling into Bitcoin over these next 18 months. And then this is when we'll start looking at getting bearish on Bitcoin, writing this down before we just rinse and repeat and do this again. Now, I want you to take a look at a couple of things. This is, you're looking at the pre and post first halving, first of all, in this gray line. This greenish line is pre and post second halving. And then now we're looking at the pre third halving. This is where we are today. approaching the halving cycle. If you go ahead and you all three of these cycles, you go ahead and put the cycle low up against each other, and then you go ahead and you look at the possible highs, you see that we're going to be trading. And if you look at this chart as well, this projects $160,000. Why? You have the low to the high, which was a 524x return. And then in the second halving, that was 130x, the low to the high. If you go ahead and you were to divide that by a factor of 3 again, you get approximately 51x from 3,129. That puts us at around $160,000. That's why I want you to see that. Now look, if you go ahead and line these up, you get anywhere between $160,000 and significantly higher. Do I think that it's possible that we overshoot the $160,000 with the amount of stimulus and the expansion of the Fed's balance sheet that's occurring right now? I absolutely do think that. I do think it's possible. And if that's the case, we'll time it and we'll see where we can get out of Bitcoin during this bullish phase that's about to begin. Now, if you look and you go ahead and you put up those cycle highs, again, we're looking at the same 3 periods, and you go ahead and you put those cycle highs up against each other, that puts us somewhere in the neighborhood. Again, this is about more or less, I would say, $130,000 and between $400,000. Again, this is the sweet spot that we're looking for. Now, history doesn't repeat itself, but it often does rhyme. Now, I am also on record in my where to sell Bitcoin in the next bull phase at $160,000. I'm reading here the same exact thing from Bitcoin Charts. If you're not following on Twitter, go ahead and give a follow. It's at Charts BTC. And he also is kind of doing the same math that I'm doing, and this is math. And that's where we have it. Again, there will come a point in time when I get uber bearish on Bitcoin as we're approaching the next bullish phase, right? Because we do have these significant drawdowns, right? We do have these significant drawdowns. And, as we are timing this towards right now, as we enter the halving towards this bullish mania phase that we're about to enter right now, there will come a time, and I'm just preparing you now, it'll be about 18 to 20 months from now when all of a sudden I flip the script and I become bearish on Bitcoin for the near term. That's not right now. Right now, we're uber bullish. Wanted to share these charts with you. If you learned anything new, if you enjoyed the video, please do go ahead and smash that like button. If you're not yet subscribed to the channel, please do so. I put out really quality content frequently that you could really benefit from. That's it, everyone. I'll talk to you later.